Well, good afternoon, folks. It is market roundup time. Joe with you here on the 7th of October, getting into a Tuesday. You guys know how this works, so let's just go ahead and jump into it. Take a look at the meaningful news of the day. I'm going to take a look at the broad markets, and I've got a couple of trades to share as well.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
Let's jump into the analysis for the markets. And as you can see, we actually did close a little bit lower. Daily news, the markets close lower. We're seeing a bit of volatility now. It's not in the VIX. It's not a big surge to panic or any of that, but we're seeing a lot of gapping up and down. The market starting higher and then dropping lower, going higher. And they're very specific to specific stocks, and it's definitely kind of news-driven here. But this jump around that we've seen are at all-time highs. The Russell set it over the last week or two. We've seen the Russell, we've seen the Qs, the S&P, the diamonds. Gold is on a tear, still moving up and up and up. So really, really toppy. So I'd expect a little bit of that jumpiness, and that's kind of what we've been seeing. The government shutdown continues, so economic data has been delayed. We do have a lot of Fed speak coming up. FOMC minutes will be out as well. But we really aren't getting any sort of numbers. All those numbers have been, as of recent, at least what I've noticed, pretty off. So how do we close overall? The Dow's down 0.2%, S&P 0.3%, you got it here. Russell percent, Q's just over. Oil up, but gold continues higher, 0.69%, and that's a pretty amazing chart. So we are seeing a pretty good move into gold. We've been seeing it for quite some time. Usually I refer to that as kind of a risk-off move. However, the overall equity markets have been just very, very stubborn and very strong as of late. We'll take a look at the chart. Let's get to the advanced decline line. 68% declining, 29% advancing. Like I say, it's a little bit of a pullback here. Below the 50-day moving average, about 50-50 still. Not a whole lot to go off of there. So here's the chart. Now the chart looked a lot different yesterday, didn't it? Without this candlestick, it's this nice little high base move, and we broke out. And I love it. The ascending triangle pattern. It's been very day to day and very kind of easy to follow. However, intraday is not quite the same. The idea is kind of this gapping, and it really did start pretty much back here. Here's another gap. We close at this level. We gap down slightly. We close up here. We gap down again. Here's a gap up that closed lower. This opened pretty much a little higher, went up to here, came back down. Here's a gap up. Pretty strong gap up yesterday. The markets looked really strong. Gapped up again today and kind of gave up the majority of what it gained. But overall, it still has the overall move. And this is what we have to focus on. Even though we see these markets, I'm going to refer to them as a jumpy markets because it's not a panic market. It's not super volatile. You guys take a look at this volume. There's no panic. It's just very specific on where money's been going in and out of. So the overall motion of the ocean is still bullish. Today's candle is actually healthy. It's almost a relief to see. Even coming back down to maybe this 20-day moving average or sitting around this area. 1 or 2 days to the downside would actually be a welcome move when it comes to maybe getting into some bullish trades in the future. Moving into the Qs, folks, you can see it's pretty much the same, almost the exact same. Lots of gapping and jumping. It's hard to tell because red candles kind of blur themselves, but this is where we closed a few days ago. This is where we opened. Came down to here and closed. Then we gapped up again and closed down. And then look at this gap all the way up to the top. Finished slightly lower after a little range here and then gapped up this morning like we saw all the markets and kind of gave up pretty much the majority, if not all the losses. But it's still in this area. Volume here, not too important. I see a little bit of an uptick from yesterday, from today to yesterday, but it's really not much to go on. It is super bullish. It is still in its same range. It's still in the same trend. I'm not going to change my outlook, at least for now. Let's take a look at our heat map. We've seen all sorts of fun things. Look at AMD, folks, another 3.83%. It is definitely this IA craze. It's kind of this push we've seen. I saw it in Micron last week. I saw it in Oracle. last week. You can see Oracle's down even further than where it jumped up, but we're seeing a lot of reaction to a lot of news. Saw the healthcare have a pretty good surge. It's a very strong surge. A lot of it had to do with maybe the Trump RX rumors and some of these companies that could qualify for that. So without the economic numbers out, the government shut down, we're kind of at this area of where do we go next. We are seeing quite a bit of movement based on rumor and news. Now that can make the markets difficult to trade. However, the overall motion is still where it's been. Let's take a look at that. I'm at a 0, and the reason being, I give you the +1. It's just cautious. I think we're going to see a little bit of a correction, maybe a little bit of a consolidation at the point that we're at right now. But take a look at this. Still +3, above the moving averages, still setting highs, jumping around and playing with those highs. We are going to be susceptible to the intraday volatility. I talked about this, I think, on the weekend class, if not before that. It's gapping. We're going to see, hey, this stock looks really good. I got into a $5 bull call spread and it got to my target in 2 days. And then it went down $6. And then 3 days later, it's up $10. So it becomes just this widening range of kind of a reaction and surging, and it can make things difficult. So just be compensating for that if those are some of the stocks you want to trade. Speaking of which, I got a couple to look at. Lo and behold, that's communication services is Pinterest. We got Zillow here. Comcast, Airbnb. So there's definitely weakness in there. It's just not those larger names. On the strong side, it's utilities. There's SO, there's PPL, utilities, consumer defensive, Monster Energy drink, Philip Morris. I mean, if anything's going to get weak, it's not going to be our highly caffeinated energy drinks and cigarettes. That's for sure. So let's just take a look at a couple of these things. So let's go to the bulls first here, and I have Monster Energy. Monster Energy has a nice breakout. I just love this. A nice little breakout that it had before. It stayed a high base. I expect these to retest, and it does. A nice surge today. Now, folks, I do think this was news-driven. I believe their earnings are coming up, and it leaked that they're going to post a really good quarter. I think it's now like a $2 billion company, and I think that kind of leaked. So we're seeing a little bit of push to the upside. That's great. This is something that we can use momentum-wise. I just like the pattern overall. Let's move over to the bear that I have. Once again, communication sector. There's a lot of strength in there, but not every stock is strong. This is Pinterest. I zoomed out a little bit on this because it is actually kind of approaching a support level that it was back into June. But I just kind of like the way this is falling. It falls pretty aggressive. Take a look at the volume that's associated with these moves to the downside. Chopping around a little bit. Now, I don't think this is going to fall all the way down to 28. It might, because there's some pretty decent support there. But it's charts like this. Now, folks, other trades that I didn't add in there, I could have, was some of the casinos, MGM, Las Vegas Sands, Caesar. Take a look at those. They're kind of rolling over, falling apart. There's just a lot of stuff out there in these sectors, the cyclical sectors and some of the communications that are just kind of falling wayward. But there's a lot in there that are not. They're doing very, very strong. So it just depends on where you look. But these are the type of patterns that I want to focus on at least over the next few days. So overall, folks, we're just seeing a jumpy movement lately, still within bull trends. And when I say jumpy, it's not associated with volatility. The specific volatility I'm talking about is in the stocks that are in the news. I mean, AMD is a great example. Oracle, Micron, anything that is doing a deal with any sort of AI component, a huge move in the healthcare sector that seems to be fizzling out. Take a look at some of those healthcare stocks, folks, that really had that massive surge to the end of last week or midweek. It's starting to roll over. So it's just a ton of volatility, so be aware of that. Gold continues to move higher. I'm not yet seeing a direct relation to the dollar. Dollar's kind of hanging in there. It's doing its back and forth thing. But we are seeing some of the cryptos come off some of those highs. We do have the government shutdown. It's going to continue. We have tentative and delayed news. That's not going to change until we get that open. But some of those numbers that have been out as late aren't very helpful at all. We will get Fed speak and the FOMC minutes. So we might see a lot of hanging on the words of Powell here on Wednesday into Thursday. Earnings season, check potential trades. I didn't put anything down there. We are starting it up. I just believe we're going to have a reactionary market until we kind of find an area that we're comfortable kind of plateauing at. But it is still bullish. There's still money coming into the markets, and there's a lot of it coming in droves, and we still have to keep that bullish outlook for now. All right, folks, thanks so much for joining me, and we'll talk to you next time. Bye, everybody.